What is up, guys? This is Gus with Stock Trading TV. So today we're going to talk about a $440 loss taken on UVXY, and a couple of things we can learn from. So let me take a look. This happened on the 15th, so I'm going to step back here and find the trade. Okay, so this is, let me go on a 5-minute time frame so we can see it closer. And I'm going to give you the reason why I took it and why I got out when I did. Now, obviously, today is the 25th, and as you can see clearly in hindsight, the idea was right, the timing was way off, and I'll explain to you why. So we're going to go back, in order to understand my entry on this, we have to go back and look at in order to understand my entry on this, we have to go back and look at the charts on the S&P 500 at the time and why I was looking for some volatility. So the first thing we're going to look at is what the daily looked at the time. Okay. We have a massive drop in a matter of 2 days, and we have a very anemic rebound. You have the 13 EMA sloping down, the 20 SMA sloping down. If we go back now to the 1 hour time frame, let me pull that up here. If we look at the hourly time frame, you could see this is what I was looking at the time. Now, my first mistake here was that at the beginning of last year when the volatility was UVXY is a volatility. UVXY moves based on volatility. Okay, and when volatility comes in, I like to trade this ETF. And now the UVXY is the ultra short VIX ETF. Okay, it's supposed to move 1.5 times, 2 times the daily performance of the S&P 500. So what I was looking for here is when you have a drop and you have an anemic somewhat. When you have 2 down days, I mean these are big down days. You have panic set in. Okay, the UVXY is gonna. When you have 2-day drop of this, you could argue there was speed behind this. There was a lot of selling. There was a lot of panic selling. Then you have this slight bounce, somewhat of anemic, and then you got another sell-off. I got interested in the UVXY at that time to start getting back. And I was trading it heavily last year, but I had not been watching it since, and especially since the reverse split. So my first mistake was just not getting in tune with it, not watching it. You have to watch it. You have to watch this for several days, several weeks, and so you can get a feel for the rhythm and how things are going. So I should have been watching the UVXY before I started trading it the minute we saw this, but I just wasn't. So as I'm scrolling, and I'm gonna pan off here to the 1 hour chart. Now this is the hourly chart of the S&P 500 and what I was looking at the time on the 19th. And if we look at this candle here, this is when I first caught a glimpse off of it, and I'm just so we look at this candle here. This is roughly 1:30. So I was looking at it on right around noon. Okay, and I saw this here, and this is a setup that I like to start paying attention to, because we got this massive drop. You have somewhat of an anemic bounce, and you see the speed. So it takes all this to recover, and fairly quickly it loses most of it. And same thing here. So we see a quick drop. So my thinking at the time is, if we're talking about probabilities, there are better odds on the bear side than the long side. And of course, keeping in mind that in situations like this, when you have, when you start going into downtrends, short-term downtrends, rallies can happen really fast. Short covering rally. So also taking that into account. So, looking at the 1 hour chart, I decided to pan in onto the 15-minute chart. And this is what the 15-minute chart looked like at the time. Now, I took the trade right around 1 o'clock or so. And so this is what I was looking at. So I see that I see this fairly quick drop here off the 20, off the 13, exponential moving average, and just below volume weighted average price. And then I saw the retest, and this is where I got interested. So I decided to take a position. And let's go back to the 15-minute chart on the UVXY. This little pullback here, which coincides with this test here, is where I decided to take. I only took 100 shares because at the time I'm on vacation, I'm traveling, so you have to bring position size down. Not to mention volatility sets in. The UVXY can move in either direction very quickly, and I was planning to do a small swing on this. So took 100 shares, and as the day continued to unfold, I saw a little bit more weakness, and on that next pop, I decided to add some more. So we're going to go back here to the UVXY chart, and I can show you here when my second entry was. Oh, actually, it split it. So let me go back to the 5 minutes so we can get, or the 2 minutes so we can get a little closer here and see where my entries were. Okay. So as you can see, on the S&P 500, the SPY, let's see, where was I? 15-minute, this is what I was looking at. And this is where my entries were as the pullback. One thing you don't want to do is, and if you're not used to trading the UVXY, if you're new, you stay away from this. You will get taken for a ride. You may get lucky here and there, but eventually, if you don't know what you're doing, you're going to get taken by this thing. Very volatile, and it doesn't necessarily trade inversely with the S&P 500. In some cases it goes down just as, S&P 500 might be slowly dropping, and the UVXY may also be slowly dropping. So, to be honest, I don't know if anybody really knows exactly how to trade, how it trades, or what the mechanics behind it. I mean, yeah, you can read the prospectus, but you can take that with a grain of salt. But for me, it's volatility, and on the fast pulls, you never chase this thing. You only take it on the fast pulls. So at the time, I mean, you can't see this candle going, but this came in fairly quickly. So I added some more, and let me go back to the 15-minute. So as you can see here, I had a 54.26 average, and I decided to just let it trade out, and so let's see how the trade unfolds. At first, it starts going in the right direction. Now, at the time, I'm only down a couple $100, so I decided to hold overnight because this was going to be a swing trade. More often than not, my thesis was that we were likely to come in and start testing the lows again. And so as the trade unfolded, the next day, now I'm an hour difference in Texas from where I live, Florida. So at the time, and this is where things started going south. I can categorize this as a good trade, but at the same time also a bad trade, because I didn't wake up and I didn't get in tune to see what was going on with the market, to see what the sentiment was in that morning. I was literally laying in bed on my cell phone looking at the price action. So I'm looking at a 2-minute chart pre-market on the UVXY, and it's about 8:15 a.m., but little did I know that it was 9:15 a.m. So when it started, let me see if I can zoom in here on, yeah, this spike right here. Take a look at the 2-minute. On the 2-minute time frame, I've seen a spike thinking 8:30 in the morning. So I'm looking at the trade at 8:30 in the morning. I'm already showing down, but in this area, I'm down roughly 500. Now, my daily max is 1,000 on a loss, but also I start considering, you know, if it's down $300 for my entry, you know, I'm gonna start considering. Now, my daily max is $1,000 for a loss. You know, that's me letting it go way out of hand, for me at least. And $500 is it's my first cushion. You know, if I don't see things changing roughly, then, you know. So I was very close at the time. It was roughly during right around here. I was down about close to $500. And what happened is I see it started recovering, but I was not paying attention to the market. I'm just sitting here on my phone, and 8:30 in the morning, it's actually 9:30 in Florida Eastern time when the market opened. So I see a quick whipsaw, and you can see it's very small, but I see and another thing that I was doing wrong is looking at the P&L from my cell phone. So I saw this whipsaw, and I'm like, okay, I'm down $400 and something. Let me just protect capital and get out. And immediately I literally got out here. 52.05. Literally, let me just zoom in this. 52.05. I literally sold the bottom, and that's okay. You know, in hindsight, I thought it was 9:30. I didn't, you know, market had it, you know, could have bounced. So, you know, my thing at the time was to protect capital. And, you know, as you can see from here on, you know, we had a nice run all the way to 56. And currently now, I mean, we reached the high of 64. So I more than likely would have sold here in the morning rip, you know. So if we had an average of about 54, 56, maybe a couple $100, not sure. I usually sell into morning strength. I'm not sure if I would have held this, but more than likely would have sold into the morning pop. And again, it was a small trade, but didn't go my way. Not necessarily, you know, it's one of those things where you need to make sure you have all your ducks in a row. You can easily, it's very easy to wipe away gains doing something silly like laying in bed looking at your cell phone trying to trade this thing. So that's about it for this loss. Just keep in mind, you know, I want to tell you guys that, you know, as far as short-term trading goes, swing trading, day trading, this is a game of probabilities. This isn't a game of being right or knowing where a stock's going to go or where you think it's going to go. It's a game of probabilities. You make your money over a series of trades. Okay, so you're going to have losing trades, you're going to have winning trades. The goal here is to minimize the damage on your losing trades and, of course, maximize the potential of your winning trades. You do this by keeping good track of all your trades and adjusting as you go along. So, anyways, keep in mind, guys, I'm just starting out with this video editing stuff. This is new to me. It takes forever to do. But I hope to help some people out. If you have any questions, comment on the section below. Hit the bell and subscribe so that you can get a notification as soon as I post up another video. If you know, back in 2008 when I started this was so I hope to and so hopefully over time the quality of the videos will get a lot better. What I would love to do here with this is do a split screen and show how the S&P 500, the SPY was trading alongside with the UVXY. So that I think that would be better for a visual. But again, if you're a new trader, if you're fairly new, you're not familiar with this inverse ETF. Just stay away from it. You will get burned. I mean, as you can see, this is how fast they can pull back. So, anyways, guys, thanks for listening. Thanks for watching, and you all have a great day.